presentation. So as you progress through the presentation, just tell me, go to the next slide, and I'll follow it through. Basically, we have 25 minutes to go over this, and as a whole, so we'll have 20 minutes to do the presentation and then 5 minutes for question and answer. Okay? Let's get started. The podium is yours, sir. Thank you.
Hello, everyone. It's been a pleasure to join you guys in virtual business meet today. The topic I was given today is the outsourcing landscape in the U.S. How it has changed from the 1990s to the present day, and possibly, I can see some directions in the future, but again, the future, nobody can predict the future. Kumar, can you go to next slide?
Yes, I'm on the second slide, outsourcing objectives.
Okay. The main reason, the outsourcing started somewhere, even though in the U.S., within the U.S., it's been around from the 60s, predominantly the offshoring or the outsourcing to the global outsourcing, it really started in the 90s. Initially, it started off, from people transporting from there to here, and mostly on on-site opportunities. It was looked upon as a skill fulfillment, where when the automation really, took off in the U.S. with the manufacturing and many other industries. So a lot of companies started looking at people, and then they wanted to bridge the gap on the skill sets from bringing people from India, or China, or Russia, and other places. And some of the main benefits of the outsourcing, or some of the objectives many companies are looking at, is number one, it's cost advantage. Definitely the labor arbitrage is a main driving factor with the low-cost countries, with India and other places. The work to be done here is done possibly, at 50%, less than 50% of the price than India. And then the next one is the demand-based resourcing. Again, sometimes, when your organization is transitioning technologically, you have a heavy demand for a particular type of resource, and it takes longer time for the organization to build up those resources in-house. So they look at outsourcing as one of the key areas, one of the key benefits. And again, skill sourcing, it's about similar. And then there were some other companies, they thought IT is more of a distraction. So they wanted to concentrate on their core capabilities and leave the IT to the experts, because managing an IT department has its own time, because you have to keep the people up to date with the new skills, and whenever you have hardware and software, you had to keep up on the updates and keep up to date. And competitiveness. Competitiveness is if one of your competitors is doing the outsourcing and cutting the cost, you are forced to get in there and look at outsourcing as an option. And in some cases, legal and the political drivers, who sometimes there are companies where force you to outsource certain portion of the work, mainly to stay competitive and keep the workforce motivated. And last one, becoming pretty recently, the reach to market. So if I'm in the retail sector, and if I really want to get into the Indian market, one of the first thing I do is, tie up with the outsourcing partner and then explore the market, and so get into the market. Next slide, please, Kumar.
Okay, I am on typical process slide.
Typically, the outsourcing starts any large outsourcing. I'm not talking about the smaller scale staff augmentation type of an outsourcing, but any large outsourcing starts out with an RFI, which is a request for information to basically the company is sending out an RFI request to the outsourcing providers to list what is possible, what their experience is, what their workforce is, and how they keep up with the market and how their supply chain is enabled. And so that is typically probably about 10 to 20, not in detail, but very specifically asking the supplier their capabilities. And then probably they will reduce some of the vendors who do not make their who do not meet their criteria, and then go for the next stage, which is a request for proposal, where the business comes up with their requests, and they say, okay, this is what we have, these are all the type of systems we have, and you come up with you propose a solution, you propose a cost. So that is typically, it varies from anywhere from 50 to 100 questions, and a lot of times they give a leeway to address other value-added factors you can bring in onto the table. And a typical response for a large RFP ranges from 50 pages to 100 pages. And then from the RFP process, they do something called a down select, where they typically reduce the number of people available to 3 to 5. And sometimes they go and check the references, and if it is an Indian provider, they go check the facilities, and so that is a down select or a shortlist process. And then from there it comes down to about 2 to 3 for a vendor negotiation, where they start negotiating on the price and the contract, and and then that basically comes down to 1. And it's not uncommon if they start out with the RFP with a single vendor, but then suddenly towards the end they change their mind and award it to 2 different vendors. So the contract could be signed with 2 different vendors for different stages of the different pieces of the outsourcing work. And once the contract is signed, there is a transition phase where the vendor brings in their people, or try to, if their current workforce is getting redundant, probably look at hiring some of their existing folks. The transition phase starts. And steady state is, you set up the team, and you entirely take the knowledge and the systems from the customer, and you run a steady state operation. And the steady state operation is mostly managed with KPIs, key performance indicators, and then the metrics, which are all which are agreed with the customer. Next slide, please.
We are on the issues slide.
And some of the issues we face mainly in the long-term outsourcing, anywhere from 5 to 10 years. The expectations mismatch. I mean, you cannot put all your expectations in the form of an RFP or a contract. And so when we actually started delivering, you have an expectations mismatch between the client and the vendor. And and some other times, you go with the skill set based on your experience, but the skill set on the market may not be what you expected. So you may have to deviate from the baseline you projected for the full-time employee numbers. And this is also becoming very common nowadays with the competition heating up. The expectations from the business users is bordering sometimes unrealistic manner. In the sense they want to extract as much as possible from any vendor, and that is a problem. And conflict of interest. So the conflict of interest is the top management in a customer may buy into outsourcing, but really when you're dealing with the middle level and the lower level managers and the supervisors, they may not be inclined to outsourcing. So the knowledge sharing, transitioning is a major problem. And role conflict and retained staff. And what this means is basically the outsourcing, you're trying to reduce the cost and reduce the number of employees. So you don't have clear roles defined for each of the outsourcing employee. So you combine the roles of the employee, which may be conflicting. And the code base non-standard, that is one of the initial reasons it started off for outsourcing, because you have a big, broad code base, but nothing is organized and everything is in the employee's head. And outsourcing is one way to streamline and organize the code base and document everything. And again, it's done justice, with anybody within the management of the customer and the vendor. And
Mr. Saravanan, yes, 7 minutes to present.
Any outsourcing, any long-term outsourcing, if the top management cannot drive down, it is going to be very, very tough, because definitely the middle management or management possibly are outsourcing in the company.
Mr. Saravanan?
Yeah.
We have 7 minutes to go.
Okay.
Growth.
This is a slide I pulled out from Indian website, how really the outsourcing has grown out of India. So one way to measure that is through the IT exports from India. So if you look at it, it started off as less than $1 billion in the 90s and touching almost $30 billion a couple of years back. And I think now it is up to the range of $40 to $50 billion. Next, please.
Okay, we are on type of work.
Yeah, the type of work, when we first started in the 90s, it is low-end recursive processing. So if the client wants to think, expand a field or like a typical Y2K, you want to expand the field from 6 characters to the 8 characters, and you got to do it in thousands of programs, and they don't have the bandwidth and the capacity to do that. So that was the typical outsourcing which happened in the early 90s. And Y2K really hit it off, and the mid-90s, there are a lot of that type of work. And in the 2000s and the early 2000s, it's the labor arbitrage. A lot of people, from business process-wise and everything, they understood the cost model in India is low, so the labor arbitrage was the driving factor. And mid-2000s, it is transaction processing, BPOs and KPOs, and BPOs, number of calls answered, or number of amount of revenue generated because of your call center. And later in the 2006-07, after the recession hit, typically nowadays people are going into managed services. So they want the vendor to take in some risk and then take over certain function or certain areas of the entire IT operation. And in the future, we think it is going to go towards partnership. The partnership could mean, running the operations or building new products and whatever. It is basically you're partnering with the customer. Next slide, please, Kumar.
Types of processes.
The types of process, as I mentioned in the previous slide also, it's initially application outsourcing, mostly, repetitive tasks. And 2000s, it started off as BPOs, started outsourcing the BPOs. Here, the BPO led to a KPOs, knowledge process outsourcing. And now it is getting into the realm of solutioning. People want to provide you an entire solution, whether it is of day-to-day tasks or new innovations. Next slide, please, Kumar.
Deal size.
As the industry matured, the deal sizes are also becoming higher and higher. In the 90s, if you know anyone who's making $1 million out of a single account, that's pretty high. And anytime we make more than $1 million, it is pretty good. And deal sizes in the 2000s started off going up to $10 million. And currently, we are talking about close to $1 billion for a 5 to 7 year outsourcing period. Next slide, please, Kumar.
Yes, recent trends.
Currently, as we said, the cost of the labor in India is going up, and in the recession, due to the recession in the U.S., the cost is slightly coming down, and so because of this, the U.S. companies are looking at other alternatives, and some of the other areas the companies are looking at is Philippines and Vietnam. Right now, almost on the BPO side, 60% of the calls is going into Manila, and in Vietnam is coming out as a technology center also in a lot of areas, because both are, so at some point in time they were U.S. colonies or de facto U.S. colonies, and you have a good portion of English-speaking population up there, and these are also some of the alternatives people are looking at. And the other thing we are talking about is the technology improvement. People are more mobile, and people want to do more things within in their mobile phones and iPads and their tablets and everything. So those are all going to be companies for traditional IT model, newer technology, and they are trying to look to outsources to get into these areas. Next slide, please, more.
Increased responsibility.
Again, as we go, the recent trend is also, before it's all hourly basis, transaction-based processing from the customers, and then now they want the vendors to put in some skin in their game to share some of their risk, and they have penalty clauses in their SLAs. If they're not meeting the SLAs, sometimes the penalties are very hefty, and investment starting of the engagement. So they want the vendor to commit upfront by putting in some money, and then again, it's not very clear-cut headcount-based outsourcing nowadays. They have come up with some productivity improvements, and they want to go for very clear, measurable outputs, which is the bottom line for the customer too. Next slide, please, Kumar.
Top 10 management tools.
Again, challenges, outsourcing is not going away. If you look at this slide, which I pulled it from Bain & Company, some of the top 10 management tools which are in the CEO's pocket, the outsourcing figure is still the number 5. It was around 4 in 2000. It came down a bit of 2000, but again, it is getting permanent. And outsourcing is going to be a strategy for many companies. Again, it's outsourcing, where I mean is global outsourcing. Next slide, please, Kumar.
Okay, where are we going? That's the slide we're on now.
Okay, this is just my estimate of the future, or my guesstimate, I would say. The low-end task typically addressing to the Indian outsourcing. The low-end task typically is going to go down to some other low-cost locations like Manila. And the other things which are getting prominent is R&D and the engineering outsourcing. That is getting very prominent in the recent days. More than IT, people want to outsource their GIS, Geographical Information Systems operations, and if they want to build a power plant, people are trying to outsource the entire engineering diagrams and everything to Indian outsourcers. And the strategy to gain market share, the labor arbitrage market was easy. Right now, it is going to be even tough with providing innovative solutions and coming up with a new strategy to gain market share. And the other thing which is coming up prominent, also a lot of companies who are who have been outsourced to other vendors for a long time, and they have started realizing some of the issues there, and so they have started opening up their own captive centers. Like a lot of, like example is Ford, PayPal, and they all have captive centers in India, and then outsourcing through captives. I mean, so what this means is basically the Indian outsourcers are sending their people to the captive's office. So if you have an office in India, you may be sending people to PayPal India or Ford India. And the other thing which is catching up recent days is non-linear pricing. Again, it's not tied to your headcount. It is based on productivity or some other measurable improvements in the business. And reverse auction, doesn't happen that much, but for very specific clear-cut requirements and the low-level tasks, reverse auction is also happening. You outbid each other, then the lowest price wins.
Mr. Saravanan, we have 1 minute to go.
Yeah, I'm about to be done.
Okay.
And then the other one which is coming up to prominence is joint development. This is more of R&D type of work. They want to partner with an outsourcer, and then they involve the outsourcer early in the stages, and then they both have responsibilities and to make the product work and to develop a product. I think I'm done. If you go to the next slide.
All right. Okay, question.
Pick up some questions.
Okay, audience, if you all have any questions, please come out. I'm going to unmute all of us so that we can pick up questions from the audience. Okay, please come up to the mic. Okay, go ahead. Tell your name and
yes, sir.
Kumar, I'm not able to hear anything.
Audience, do you have any Audience, do you have any questions?
Hello, I have a question, sir.
Yes, go ahead.
So, Wisdom School of Management.
Okay.
So we have the IT industries, so many industries in our country, and getting the jobs and other things from the abroad. For that, why don't we implement some strategies or some management tools to implement in our country?
Kumar, can you repeat that question for me, please?
Yes, why don't we implement our own management tools to develop the IT industry in our country instead of depending other countries? Is it possible?
Kumar.
Okay. So the question is, why don't we build our own IT infrastructure instead of depending on other countries? It's related to outsourcing, but still it's related to IT. So will you be able to field that question?
Sure, I can take up some things, yes.
Okay.
It depends on the type of business you are in, because typically, the IT business needs are different. If you are an employee, if you have your own IT department, you have to spend for IT training. And again, it is the skill. If you are not able to have a bigger IT department, you don't want to spend a lot of money and keeping up with the IT trends. And whereas your core business is something else. So you want to concentrate on your core business and leave the IT to the experts. And then again, the other infrastructure-wise, the scale is becoming a factor nowadays. The data centers, it used to be, small to mid-sized data centers where you have about typically 500 to 1,000 servers. Right now, you are talking about the minimum data center capacity if you want to operate economically. It's about 10,000 to 100,000 servers within a single data center. You have these huge data centers from Amazon and Google and everybody else. And so the scale matters. And if you don't have that scale, your costs go up.
Okay, next question. I hope that answered the question, sir. Any other questions from the audience or panelists? If you have a question, please type it in the chat window. That way it will be easy to comprehend and repeat to the presenters. Let's give 3 more seconds and then move on. We are going to skip the break time. If you feel if you have natural needs, please proceed. We want to continue due to lack of time. Okay. So I want to take this time to thank Mr. Saravanan Krishnamoorthy, Director, CSC Corporation, South Carolina. And I thank you for your time and your global perspective that took us from 1990 to 2012. It's going to be very helpful on whoever is interested in this domain. Thank you, sir.
Thank you, Kumar. Thank you, students.
Okay, our next panelist is Ms. Terrace Riley. Ms. Terrace is with us. Ms. Terrace, can you speak on the microphone?